Dum 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 dum. All right, AC on the TSX. That is Air Canada, home of our. All right, forget that. Got an alert triggered for this one, and let's check out the monthly candle chart. Wait, let's zoom it. Zoom, and vroom. Let's center that. There you go. So this is my focus. Monthly candles. 1, 2, 3, 4, 5, 6, 7, 8, 9 months. Monthly defined resistance. Monthly defined support. And that's probably why I had my alert, because the price action went below 23.80 or 23.75. Right here, yeah, 23.75, just about. 27 is the resistance and 23.80 support. Using monthly candles to confirm the wind direction. So when we look and we get ready to set up our sales on the weekly, on the smaller time frame, we make sure that we have the higher prevailing trends wind in our back. And if we have a monthly candle close, and months, guys, they pass by so fast. Honestly, with all the alerts I get, 40, 50 per day or every 2 days, or it depends how tight I put them and how many I put across all the tickers that I check. Man, I wish there were more days in the month. So if you want to accelerate time, make another emotion management technique. If you want to accelerate time, to not dwindle your thumbs, because if idle hands, then you'll just start getting trigger happy. I want some action, whatever the gambler's symptoms. Then, well, look at a lot of tickers, set a lot of alerts, and that's going to take some of your time. And all these alerts, when they get triggered, you'll get back to the stock, check it out, set new levels, reanalyze, get new tickers, and that's going to take up a lot of time. And when you use all that time, a lot of things happen. You get to practice your framework, you get to see more charts, you get to see the nuances between A+ setups, A++ setups, and you'll start just observing things. The more you look, the more you get to see things, and the more it's like seeing that matrix, right? All those green numbers going down the screen. Well, eventually, the more you do it, you start seeing patterns within that. So that's the advantage of always getting a mechanism to get you back to open up your trading software, to look at the charts, to set alerts. So that's a good thing if you want, if you have issues with that trigger happy there. If you do monthly candle charts, and then you have to usually wait towards the end of the month, the beginning of the month, to confirm your breakouts or breakdowns, then that month seems less long if you're really occupied. And that's what's happening to me now, getting a bunch of alerts, and every day I look and damn, oh man, I'm getting so close to the end of the month, and just a cycle keeps over and over. If you don't want to look at the charts, you want to do something else, well, get a hobby, go play tennis, and do stuff. So this is it, pretty simple, measure and move, high to bottom, add it to breakdown line, and this would be my target, my 2050, 2040 target. So I know right now that on the monthly candle, I'm going lower if I have that close below 23.75 for May. Okay, let's roll over to Stan's weekly chart. What do we have here? The breakdown line actually is right, it's a little lower, because on that weekly charts, you have more noise. Here's the close for the 23.80, 23.75 is the close for the monthly. And we're going through that. And now weekly, noise included, the breakdown line is at 2250. And 2043, the target from our move from the monthly candle coincides with the Ichimoku cloud for that last resistance. So right now, if we didn't have the Ichimoku cloud, let's remove that. Stan did not use it. If you'd have a close between 2 and 250, 30 moving average starting to go down. RSI, well, he'd be using the Mansfield indicator, going through halfway territory, going down. If we could get that volume, the twice the average of the previous 4 or 5 weeks. I know he talks about fear being the indicator. It just goes down. Sometimes there's not a lot of volume, just the price plummets. Well, I've still noticed that you have nice red candles on those nice breakdown lines. Well, it's very close. This is trading territory, real breakdown territory. So you have a couple of reasons to wait. The monthly candle, just make sure you don't get trapped into a false breakdown. Price action could actually bounce here. And then after that, this morphs into just a consolidation rectangle. Instead of being a stage 3 that becomes a stage 4, it's a stage 3 that becomes continues as stage 2. And the next reason to wait, let's reactivate our Ichimoku cloud. Is all this potential support right here. So ideally, you'd want to wait for a candle to go through and close below 2040 and then the patterns mature for a breakdown. Seems far, but you need that intense move to go down for that momentum to build and keep going down to wherever the stage 4 is going to bring you, right? It's going to bring you back down to 15. It's going to go back down even lower to the 10 area. Who knows? But rule number 1, don't get trapped. Time is money, and you don't want to get into a situation where you got in too early and you're getting whipsawed and you're stepping on a bunch of emotional landmines. And then you start panicking, and then you got in, you thought it was breaking out, then you cheated because you got greedy, you put your sell stop too close, then it whipsawing, and after that you get whipsawed out, and then price action goes back down. Situations you want to avoid, those are unnecessary losses. The best way to augment your success percentage, successful trades, is to reduce the amount of unsuccessful trades. It's like when I always play tennis with my friends, I've realized that when I play a boring game and I don't try new moves, I usually win. Or I win more often than when I just play when I try to practice new moves during the game. It's a game of errors. The least errors you do, the higher probabilities of you of winning. So keep that in mind, and trading's the same thing. It's a game of errors. The least errors you do, the longer you stay in the game. The more you could just grind out or reapply your framework with consistency over time. Get that whatever percentage you're looking for gain per month, 1%, 2% gain on average, and churn that year over year as in a stable way with minimum drawdowns. So every time you don't get in the trade too early, every time you don't get whipsawed, every time you don't land in an emotional landmine, that's less pressure you put on yourself to go Hail Mary and start looking at the crazier and crazier trades, which make you more and more whipsaws, would make you put your sell stop too close, your initial sell stop too close, because you want to increase your position size to catch up whatever loss you did before. So the best way to stop that is to start putting small position size, putting sell stops, initial sell stops super high, really above. And even if you get in too early, at least you're not going to get whipsawed out right away with some crazy candle, and you'll get the timing better eventually by saying, oh, okay, I had to wait for the Ichimoku cloud penetration, I had to wait for the monthly candle close to confirm, and then you'll start learning, and you'll stay in trade. You'll have less of those 1% losses of your NAV, and you'll be running less and less for higher higher risk to reward. That's the way I'm doing it now, and it makes me sleep a whole lot better at night. All right, guys. So that's pretty much it for Air Canada. Stage 3, potential stage 4. Watch for that monthly candle close below 2380. Watch for that weekly close below 2235. And eventually that final close below 2043 for that stage 4 breakdown. All right. See ya.